Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
Welcome to South Economies with Mel and Peter, an East meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi Mel, how are you today? How has the week been so far?
Hi, Peter. It's been an exciting first week of February. We're working on several things, including we're very close to releasing our first magazine of the year. So that's the China and ASEAN Quarterly. So a lot of things to look forward to from Lundin's Investor Insights. How about you, Peter? How are you today? And how has the week been so far?
Yeah, it's busy as always, and that's good.
Mhm.
Quite a lot of conversations with investors. Again, what to expect for the year still. Also conversations about how much tech stocks are taking up on sort
Yeah.
of the all stock indices, so to say. So very exciting, as every day here in the shop. So I can't complain. Anyway, let's have a look at this week's agenda. What we are looking at basically is what we talk about. Briefly, we'll start with the sort of wide span, basically from the startups to the unicorns in Southeast Asia. What's going on there? What happens? Then we will spend some time on Trump. That's but of course we will look into some of the tariff actions that has been done and undertaken.
Yes.
That is for the financial markets pretty important, of course. But then we will also look into other happenings. As a what is sort of going on else as interesting things going on,
Mhm.
and but it sort of drowns in the Trump focus. So there are other stuff that's interesting for investors to look at and dive a bit into these happenings. And finally, just sort of a election check in Germany, so to say. Last week we spent quite a lot of time on Germany and what has happened politically, and now we'll see if it has sort of come to any reaction in the polls. And as always, of course, we end up with what we think globally about the market. Yeah, let's start with sort of the startup to unicorn scene in the ASEAN area. You had some interesting observations.
Right. So we actually looked at the trend about unicorn startups, the ability of Southeast Asia to nurture or grow these unicorns. We know that there's a relatively small share of unicorn status businesses in this part of the world. So there's about 1,500 unicorns globally, and these are defined as companies that started as small businesses and eventually grew into $1 billion value. And there are only 42 of those in Southeast Asia as of last year. So it's kind of low considering how much potential we always see here in this
Mm.
part of the world. But there's kind of an imbalance as far as which countries are able to produce these unicorns and which ones are not so good at nurturing them, so to speak. So we
Yeah.
have leaders like Singapore, as expected, and Indonesia. And then the
Mm.
rest of their neighbors are pretty much lagging behind. So they have maybe four, five each, and then 20 are in Singapore or based in Singapore. So the
Yeah.
difference that I see is really regarding ease of doing business. So the
Mm.
business environment in each of these countries vary. And
Mm.
that's one of the reasons why there's such a disparity in terms of the number of unicorns hatched per country. And of course, there's also the issue of policy certainty, or in other cases, uncertainty. So
Yeah.
some of the countries that we observe are quick to change leaders or change majority parties that control the governments. They're not performing so well as far as harnessing these unicorn startups. And across the region, though, funding is available. The ASEAN is actually known for its ability to save, like their household savings are relatively high. But
Mm.
in terms of bringing that into the banks and financing companies and accessing those in as loans for new
Mm.
businesses. That's also where one of the things that lead to the variation of the number of startups or the value of startups that are being built in every country. So it's an interesting space to look at, considering that we're also very interested in looking at which one could be the next Alibaba or Tencent, maybe. We're looking out for that, especially that growth is really much faster in ASEAN.
Mm.
So it's an interesting space to watch, Peter.
It is, yeah, yeah. And as you mentioned, the pretty strong savings in the households, yeah, and we have come across it before in that the Asian Development Bank is actually pointing at the the savings in the households and the desire to start up new businesses that now can be founded by the households themselves
Yes.
is an expected future growth engine for the Asian region.
Mm-hmm.
Simply that there's own housemate growth in that way around.
Mm-hmm.
That is interesting, and I can now and then I'm in a global jury for about sort of handing out a startup award.
Mm-hmm.
And what I've come across in all the different startups I evaluated and seen from across the world, and also comparing to as what we see in our company, because we see a lot of growth companies asking for money, and we're helping them. Malaysia is a particular interesting scene for startups I see in your region, and that is from an outsider's sort of
Yeah.
view. But actually, what I've seen there as a global jury member is Malaysia is interesting, and it is something as a just out of my own professional interest. When I have time, when I'm in Asia, I will try to dive into that particular thing that the startup scene in Malaysia, so to say. So it was just to give a comment on that one, and I agree very much that Asia, and that is important for investors, is more and more self-sustainable, so to say, also in the production of new companies and new companies coming to the stock
Right.
exchange and getting IPO'd. And that is, of course, interesting, particularly Southeast Asia, more interesting for investors.
Mm-hmm.
Good, very good topic. Then we promised we can't avoid to spend some time on Trump. He's
Of course, we always
yeah,
have to.
yeah, he's still taking up quite a lot of focus and
Yeah.
fair enough. It also means something for the financial markets and for investors. So of course we have an opinion. We watch what happens. It's of course very much the sort of the long-awaited tariff action discussion, so to say. And end of the day, the threats towards Mexico and Canada was pretty serious. Yeah. Should I say
Yes.
one thing? The Mexican presidency did a good job, actually. I think in sort of taming Trump. But we also have some tariffs towards China. China has responded.
So China is actually rolled out like four different types of responses. So there's a
Mhm.
tariff as well, 10% on crude oil, on farm equipment, and 15% on US coal and natural gas. And on top of that, they also announced non-tariff measures like investigating Google for anti-competitive behavior. And
Yep.
there are reports that Google, after Google, Intel is next, so a microchip company as well, and Nvidia as well. And then there's also a ban on like a US brand that the US fashion brand that makes Calvin Klein and Hilfiger. So it's a wide array of ammunition, so to speak, which the president of China, Xi Jinping, tried to unleash.
Mhm.
Although it's kind of soft compared to what Trump is communicating.
Yeah.
And it's probably to leave some elbow room to negotiate and maybe
Yeah.
strike a deal that's similar to Mexico and Canada. Although it was not swift. So Mexico and Canada, they got it rescinded on the same day that it was announced, right? But China is waiting it out until they could speak together. So that's the
Mm.
difference mainly, Peter.
There's no doubt that US and China are the two superpowers in the world.
Mm-hmm.
In particular, when we talk about economy, basically also political. And there's also when two elephants, the two old elephants, they go for the fight. Yeah, they even have respect for each other. Very obviously, that the response for China is basically defensive. They don't want to escalate.
Yes.
Um, it leaves the door open for doing more. As the tariffs they're introduced is not really a threat to US, or it's a
Right.
threat to Chinese economy. And we are laughing a bit about the investigation of Google. Google doesn't work
Yes.
in China.
Already
So,
banned.
so, but of course, what you are indicating, Melis, is exactly that Google is to take something that doesn't hurt anybody. Yeah.
Oh, yes.
So
Correct.
yeah, but the step up are the companies like you mentioned. Yeah, we're going
Mm-hmm.
into the chip production, all the stuff, and then it all of a sudden is more painful. Yeah. So this is as of right now they're just testing each other a bit. The tariffs that the US introduced doesn't matter either. Yeah. And if we look into the Chinese stock market, I know now it has been the Lunar New Year, but after
Yes.
all, the Chinese stocks outside China have been trading. There's been a few days off in Hong Kong. It's pretty calm. Yeah. This level, we are not nervous at all. We had all expected more. But
Correct.
again, as a Trump, he needs China,
Yes.
maybe, to solve the Ukraine war. There's a lot of things in sort of on the table, and it's maybe not so easy to do a tariff war as promised in the election campaign.
And I think
So
China has a leg up recently with DeepSeek. So they have a lot more to bargain with Trump right now, Peter.
they have. So we're still not nervous about for the world and for the global financial markets. It's basically the conclusion. We've not been before the tariff
Mhm.
war should start. We're still okay. This is not enough for us to change any sort of uh, overall view. Of course, what we should be aware of, what investors should be aware of, there are prepared next steps. And they will for certain companies, and we are talking about certain companies or sectors, they can be decisive and painful. The same
Mhm.
is if Trump should do anything against Europe or the Eurozone, EU. What is prepared in Brussels is very precise needle stick actions, tariff needle stick
Mhm.
actions, so to say, that will hurt um, businesses in maybe just one state in the US, but not just a state, but it is the states where the senator or whoever is a strong Trump supporter. That is where EU will go and try to hurt business. So this time it is really well considered, and of course, for
Very
investors,
tactical.
yeah, it is. But for investors in these precisely these companies that could be there sort of squeezed, it can be pretty fiercely. Yeah. So it's a difficult sort of judgment for to dive into all these potential outcomes. But anyway, this is how we see it. We would have loved as a initiatives to increase global growth. That is the
Mhm.
only solution for the world and also for the US middle class. That's another story. But Mel, what we find interesting here in our humble company
Mhm.
is quite a few things that happens around the world and that are significant, but that is drowning in the Trump focus. Yeah.
So on my side of the world, a very, very interesting and revolutionary change that we've seen just this weekend was a major tax reform initiative in India. So India has been known to be one of the fastest growing economies. Um, they haven't been so satisfied but with a 5.4% expansion last year. I mean, it would be a dream for the rest of the Europe or Americas to grow like that. But as a country that's used to like a 7, 8% growth, they're worried. So what they did was to cut personal income taxes. So now the tax exempt uh income is at 1.2 million rupees. So that's about 13,000 US dollars. Before it was at
That's pretty,
700. Yeah, before it was 700,000. So that's almost a double increment in terms of the brackets. So a lot more of the middle class are able to take home a bigger pay. And that is expected to boost consumption, which has slowed from 20 in 2021. Consumption growth was at 12%. In 2023, it was just at 4%. So that's really a big dip as far as consumption, which accounts for like 60% of their GDP. And now they're hoping that this tax reform, which will be formalized in a bill soon, will lift those numbers up. Now, the concern, I think, Peter, is that the impact may not be as large as expected because India has a very big informal sector and a lot of the workers may be there. So the impact may be not so direct or not as big as far as the multiplier is concerned. But overall, it's a good move as far as boosting household spending.
in reality, it's a big thing. As I
Yes.
know, you say, okay, there's a parallel sector, so to say, but
Mm-hmm.
it's more interesting to be in the official economy, yeah, because
Yes.
this means that even up to middle class incomes or middle class salaries is sort of tax free, so to say. There's no income tax on that. And again, as a that was introduced in the Philippines for some years back. Yeah,
Yes.
that's basically it's that a middle class income is basically not taxed
Mm-hmm.
or income taxed. Yeah,
The impact here wasn't too felt because it was right before the pandemic. So before it could
yeah,
really take off, yeah, it was a different story. But maybe it could work longer and better in India.
yeah. It crashed a bit in the Philippines. Yeah, but anyway, it means that it's very attractive to try to as a work to get one salary to have
Mm-hmm.
a high incomes. And we should again consider into the Western world if it was the case that even middle incomes or
Mm-hmm.
middle as a sort of income salaries were not taxed. Wow, it's a big difference. These is kind of tax incentives for private households ends up in giving a much more flexible economy. It is much more inspiring to earn more money.
Mm-hmm. Ah,
So
yes.
that is it gives a completely different dynamic in an economy that should not be forgotten, and that is what, of course, what the Indian government is trying to achieve,
Mm-hmm.
and we are talking about the fifth largest economy in the world.
With
It is yeah.
over a
So
billion people.
yeah, one point what it is three is 1.37 also, but
Mhm.
so it's a huge economy, it's a huge country, and it's a big it is actually a big tax reform. So that is interesting, and this is
Mhm.
what happens. As a again, what we as investors should learn and remember all the time. The world is moving all the time. We might look out of window and see it's very static, and that's what the case is in Europe. But the world is on the move, and that is good news for investors because if the world is on the move and change happen, new opportunities arise. So that is interesting, and also in the context of last week we had a conversation about that this year will be the IPO year on the
Ah,
stock
yes.
exchanges, and that is also expected in India. So there will be a additional inflow of of simply equity as a shares
Correct.
stocks to trade to invest in. So the supply will be bigger, and that is of course how to say it consolidating sort of a lower GDP growth
Mm-hmm.
that could scare investors away. So these actions are that the Indian government takes is important and is notable. Good. That was the fifth largest economy in the world. Here in Europe, we have a few large economies left, but they are very static. We have smaller economies that are on the move as well, and that is interesting. Again, it is sort of drowning in the Trump focus, also in the media. Last weekend, Belgium got a new government after 7 to 8 months negotiation. They have a tradition for using a long time on getting sort of agree on the government, and that's because they have this heavy political split of the country. Sorry, but the new prime minister is never been in the seat before. He's actually the mayor of Antwerp right now, and he is really right wing. So that was another right wing coming in the seat in Europe. But what they'll focus at is to reduce the public debt. Belgium has a notorious deficit, so the public debt they will reduce, the budget deficit they'll reduce, and they will reduce the public sector simply. Hardcore medicine for Belgium, but they do something about it. The new government in Austria that is also very right wing, so they're sort of also anti-EU. But they want to, of course, do something with migration, but are also focusing on the debt and particularly the public deficits because EU is starting to hunt Austria. So that will be another country in Europe, but not a big one, that is sort of starting to reform the economy. And last year we saw Greece introducing the 44 hours working week for at least some in Greece. Now, these are all the smaller countries, but they are starting to come on the move. And then we have European large elephants, France, Germany completely stand still or negative economic growth. Italy is a bit the same. Spain has a bit more growth, but it is not sustainable. This is interesting. A lot of things is happening here and there, and we should remember to see it because it's important for investors. And it also underlines a bit we now and then see in the financial market that there is a heavy focus on some particular issue. It can be now. Right now, it's Trump, yeah. But and this is like you're watching a magician. You are misled because you don't see what really happens. You are distracted. And right now, the market, medias, investors has a risk of being distracted of Trump and always as a sort of not really see like what happens in India, what's going on here and there in Europe. So to sum up, yeah, interesting what Trump is doing, but a lot of other things are happening and he cannot control or rule everything. And we should remember to focus on what else is going on because the interesting stuff.
And for sure, Peter, the changes in governments in Europe, for example, it's really more domestic issues than a Trump effect, for sure.
Yeah, still, yeah. I could actually see some Trump effect coming in, as there will be some of his values, what he's arguing about, that could start something. It also influences the German election. And yeah, maybe just to catch up on the German election as we promised, because we spent some time on it last week. Now there have been some polls coming out, and there's a usual opinion polls that are taken after the Chancellor Merz opened up for getting a proposal in the parliament supported by the German right-wing AfD. And there have been huge demonstrations last weekend. 160,000 people demonstrated against him in Berlin. But what are the voters saying? And to cut it short, basically there's no change. You could say there's maybe 1 percentage point more for AfD actually, maybe a bit 1 percentage point more for the Greens, sort of bit socialist party as a green and socialist economy, and then a bit back and forth, 1% back and forth for the coming councillors, Mertz's own CDU party. So far, you could say that his own voters are actually accepting what he's trying, his technical move. And that is again opening up for the possibility of maybe a CDU minority government. He is right now saying it will not going to happen, but it can be he can't do anything else. So that is actually nothing has happened so far. But on the other side, voters are not running away from him on this background, and that is maybe the interesting part. So we will see on the 23rd of February. Yeah, well, that was sort of what we had on the plate today. Of course, as always, we will give a short update on what we think about the global outlook. And now it's your turn to to say something for sure.
For Asia, India is really a good spark, giving a good spark as far as optimism towards this region is concerned. That's a really good move that would boost growth prospects. And of course, that would bode well for everyone else in the region. For China, there is still this cautious approach towards China because of the tariff situation with Trump and the US. But there is a way forward for sure. As they did before, there is a way to negotiate. It's just a matter of how soon it will come, because right now they're the ones facing the additional tariffs. But once they get on the negotiation table, it could be a bit better at least. But as far as growth, it remains robust. Activity is strong here. Consumption of households is going well, some faster than in other countries, but growth prospects remain strong here, and we remain optimistic towards assets in Asia, Peter.
Yeah. On the lines that we are happy with the world. We like risk still. We are fully aware there's a Trump risk right now that that's no surprise. We still underweight Europe, and that is no news. We prefer Asia, we prefer US. We like still fixed income, though in sort of middle duration. We still like to have credit bonds and emerging market bonds. So we're happy with risk. We are fully aware of clouds somewhere on the horizon, but it's still not a time to act, because the clouds could also be counter work with other initiatives or happenings. A cloud is the interest rate levels won't come down as expected, and we have a tech concentration in the stock market that is a challenge. But all in all, we're still okay with risk, and we prefer to have risk instead of reduce risk. So yeah, that's basically all sunshine, and that's basically it. So I think that was our positive outlook, and very specific thank you to the audience for listening, and of course also thank you to you, Mel, for joining in.
Thanks, Peter.
We will be monitoring global developments and will share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longrange Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longrange Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top-rated mutual China fund. To know more, visit longrangecapital.com.